You don't want to go broke with it. If you don't have enough assets, you probably don't have a tax problem, and then it might not pay for you. Maybe you only need enough life insurance to protect your young family in case of an early death. That you should always have. The bottom line is that life insurance provides tax-free cash. Tax-free is always the best source of money, and it also solves lots of non-tax problems.
I think everyone would agree about that. Tax-free is the best.
Well, this is all good, but people make mistakes when it comes to life insurance planning and understanding life insurance. Here are the 5 most common life insurance mistakes. Mistake number 1, thinking that life insurance is a cost and not looking at it as an investment. If you put money in a bank account, that's an investment. This is the way you should look at life insurance. You want to put it in as an investment. And the bigger the number, the more you'll have. It's not a cost. It's your money. It's an investment.
I can see people in the comments saying, Caleb, he got you. The IRA expert called it an investment. Life insurance is an investment. I hate to say it, but Ed Slott is wrong. Life insurance is not an investment, but what he is saying is we should look at it like an asset. It should be a positive thing. We shouldn't look at it as a negative thing. It's not a cost center. So he's using the word investment. That's totally cool, but it's technically not an investment, and we shouldn't compare it to investments. We should rather use the word asset and something that enhances our portfolio.
Item number 2, trying to pay the lowest amount for life insurance. It sounds good, right? Do you want to pay $1,000 or $10,000 for the policy? With permanent life insurance, you might want to pay more. Like I said in item 1, think of it like a bank account. You may want to maximize the amount you have available. So you may want to put more in.
We call this max funding or overfunding, and you'd only want to do this if it was an asset. You wouldn't want to do this if you saw it as an expense or a cost center.
Mistake number 3, not understanding the benefits. Now, I went through some of the benefits before, but let's review them. For example, with life insurance, you have a tax-free payout after death. And generally, it's judgment proof. Also with life insurance, you have lifetime access to cash value, tax-free, so it won't increase your income. It won't cause Social Security to be taxed, and you won't lose tax benefits because your income increased, like losing exemptions, deductions, and credits. Life insurance is exempt from estate tax if it's set up right. And with life insurance, you get a guarantee, removing stock market risk. The government has restrictions on how much you can invest, but you generally want to put in the maximum you can. Mistake number 4, improper ownership. Don't own it in your own name. Why on earth would you want to own something like life insurance that you can't possibly collect on? Why would you? Keep it out of your estate. We see this all the time with clients. It's one of the biggest mistakes made. In fact, we had a young client, young couple come in recently, very successful couple, made a lot of money, and we were going through the assets they had, and the husband actually did have $5 million of insurance. And then when I looked at it, it was owned in his own name. And I said, what'd you do that for? Do you realize that if you die, that $5 million comes right back in your estate? And if your estate is subject to estate taxes, the government could get half of that. Why would you own it in your own name? You want to keep it out of your estate. And I told them, go back to your insurance agent and fix this. And it's not that easy to fix, but it can be fixed. There are waiting periods, but go back to your insurance professional. Well, when I said that, he said, I don't even remember who sold this to me. So this is just an aside. Don't you think you should have a better relationship with your advisor? You shouldn't own it in your own name. It should be owned by somebody else or a trust. The life insurance premium should be paid by the beneficiaries or by the trustee of an irrevocable life insurance trust so that the life insurance proceeds will be estate tax free. Oh, and one item here. One downside, be aware that if you don't own the policy, which is what I'm saying to do, not to own it in your own name. If you don't own the policy, you may only have limited access to the cash value because you don't own it.
Yeah, so, okay, Ed Slott goes off on this, and so I'm going to go off on this. I disagree. I think if you are wealthy and you're using life insurance for estate planning, meaning you're buying life insurance to better, more efficiently pass on money to your estate, 100% agree. Get in an irrevocable trust. You could call this an ILET, have that type of planning. One of the things that Ed said at the very end, one of the major downfalls if you do this is you lose some access. You lose a lot of access. If it's owned by an irrevocable trust, all the benefits that he's talking about with retirement planning and all these things being able to control and use, a lot of those don't become that easy to control anymore. And so here's what I'll say. I don't know if he would say this again or maybe not emphasize this enough like now into like 2023, because if you look at the estate brackets for most people watching this, if you're setting up life insurance to better control, I wouldn't, be freaking out and saying, oh, I need to change my life insurance into a trust or whatnot. It is something good to know. And I will also say you can always change it at a later time, and it's not that hard to change. And so all I'll say is I agree that it is important to know who owns, and especially if you have $10+ million and you believe that you're going to have a estate problem, 100% agree. If you want to better control your money throughout your life, one of the worst things that you could do is put your life insurance into an irrevocable trust. So I want to create that caution, and I don't want a bunch of people just taking that soundbite and going and getting their life insurance into an islet where they're giving up a lot of control.
Mistake number 5. Not knowing it's tax-free. I don't even know if this is a mistake or a misconception. Can you believe it? Still, people don't know that life insurance is tax-free. I get calls every now and then from a beneficiary. We did planning for their family, and they'll call me up and say, Ed, I just got this check. What do I do with it? How much do I owe in taxes? I said, I told you 1,000,000 times, it's tax-free.
Yeah, it's huge.
The benefit is so good, even when people get the check, they don't believe it. The life insurance is tax-free. So let's review.
And it's not only tax-free when you die and the money passes on, but when it's set up and used properly, you can borrow against it, which alone becomes a tax-free access to capital. It grows, tax-deferred technically, and then it gets passed on tax-free. And so it truly is an incredible tax loophole. You could say loophole, but it's totally legal. And I think what Ed will talk about is why it's even a good thing for the government.
Risk is a silent retirement killer. Life insurance can eliminate both stock market risk and tax risk.
True.
And it can be used during your life to create a tax-free retirement fund. Life insurance is not only income tax-free, but can be estate tax-free too. You can contribute almost unlimited sums to a permanent life insurance policy and have tax-free access to your cash value during your life without increasing your income. And don't forget about the most basic life insurance benefit. Aside from all the estate and retirement tax planning advantages, life insurance protects families when there's an early death, young families. It's hard enough to deal with the loss of a parent, but at least life insurance can provide the needed cash so that life can go on without having to make any severe changes due to lost income. Money for the family, tax-free money. I never met anyone who didn't wish they had more life insurance, especially a widow. I like to say that life insurance takes care of families without first going through the government.
If everyone had life insurance, we wouldn't have the problems we have in our country, and our country wouldn't be broke.
You need to review all of these points with your life insurance professional who can fill in the details. But now you're much better informed and ready for the conversation. You might actually even enjoy the conversation now with your life insurance agent. Can you believe it? Life insurance is not only the single biggest benefit in the tax code, but it's also the most cost-effective way to protect a large IRA. You need to have a discussion with a competent, educated advisor that, in addition to being a life insurance professional, has the specialized knowledge in retirement tax planning. The coordination is essential, especially if you've built up significant balances in your taxable IRAs or 401ks. Most advisors do not have this level of training, so be careful.
Here's what I'll say, and this is a word of caution. A lot of people will say, hey, Ed Slott said that life insurance is like the best thing in the tax code. And then what they'll say is put all your money into life insurance, because that obviously makes a ton of sense. And I disagree. Ed Slott would disagree. What he's talking about, being the guy that people are going to for the IRA and just like qualified plan expertise, is like, hey, knowing this, life insurance helps unlock, it should be a part of your portfolio. It enhances the result that you're saving and investing. That's what he's saying. And so it's really, really, really important to understand how this asset plays a role in other assets and how you're getting a better result because of that.
As tax rates increase, life insurance becomes more valuable than ever before. And there are
And do you think taxes are going up or down?
Increases on the horizon. You have new healthcare taxes coming in, as well as higher tax rates. You can plan for that now. And if it doesn't happen, what's the downside? You and your family have sheltered that much more money, since it won't have to be used to pay taxes. Here are some of the frequent questions I get about life insurance. Ed, If the tax exemption for life insurance is so good,
It's a great question.
won't the government take it away? No. Why? It's a social reason. Why do you think our government encourages us to give money to charity? Because if you give money to charity, you get a tax deduction. Why is the tax code loaded with incentives to encourage us to give money to charity? Why does the government want us to give so much money to charities? Because they're broke, so they don't have to do it, to remove the burden from them. It's the same thing with life insurance. Our government is broke. Our government wants us to take care of our families so they don't have to. They want us to take care of our families with our own money, partnered with private insurance company money so that the government doesn't have to.
I think of the tax code as just incentive, like a treasure map, incentivize you to do certain things. Like right now, at the time of this recording, people are all into electric cars. The government is giving money for electric cars because they want more people driving. That's an example of an incentive.
Next question I get, Ed, what if I don't qualify for life insurance? I have to tell you, more people do qualify than you think. I've seen it even with very ill clients. So don't assume you won't qualify. Leave this to your life insurance professional to check for you. More people qualify than you think.
What I'll say is you'll most likely qualify. You'll just get a radically smaller death benefit than someone who's a lot younger. So usually it doesn't have to do with the cash value. It has to more do with the death benefit, because if you're older, your chances of dying are higher and you're closer to dying, mathematically. And so obviously the risk or the amount of death benefit is going to be smaller.
Here's another question I love. Ed, how can life insurance companies do this? They'll lose a fortune. Oh, now you're worried about life insurance companies? Don't worry about them. They have actuaries. We're not going to hold any benefits right away for life insurance companies. They're doing fine. The answer is it's in the numbers. The risk is spread over a large pool of people. Don't worry about them. Insurance companies are some of the most solid financial institutions.
Yeah, and what I'll say about this is insurance companies are one of the only institutions that hedge both interest rate and mortality. They also have different type of products. So they have temporary term and disability, which tends to be more profitable than their permanent insurance. And this is why being a part of a mutual carrier is really, really key, because you want to participate in the profits. Not only should you not worry about insurance companies, but you should want to participate in the profitability of them being successful.
Ed, why doesn't everyone do this? You know what? I don't know.
I do.
I also think that insurance is not sold properly,
Yes.
so you look at it as a cost rather than investment. Many people think they're buying something and they don't see how it fits into a plan like I've been telling you about. A good financial advisor or insurance professional can explain the planning aspects. Ed, which is better, saving in an IRA or an insurance policy? That's interesting. Life insurance wins hands down. Let's compare. Let's compare life insurance to a tax-deferred retirement plan like an IRA or a 401k. If you compare life insurance to tax-deferred plans, life insurance has several advantages. First, with life insurance, you have lifetime access to cash value, tax-free and penalty-free. With an IRA, withdrawals can be heavily taxed, and penalties too. Also with an IRA, after you're 70 and a half, you're forced to withdraw and pay taxes whether you like it or not. Life insurance provides a tax-free death benefit, income tax-free, estate tax-free too if owned properly. And with life insurance, there's no risk of future tax rates increasing. I mean, they could increase, you just don't care. Just so you know, the Roth IRA also provides this benefit. The reason you don't care is because what would you care about taxes if it's all tax-free? But here's what you don't get with life insurance that you do get with an IRA and a 401k. With life insurance, you don't get a tax deduction like you get with an IRA or 401k. But a tax deduction these days is a trap because you'll pay much more in taxes later. All right, the last question I always get.
Impressive.
Come on, Ed. Are you working for the life insurance companies? This is too good to be true. No, I told you that before. I'm here for you. telling you how to create and build tax-free wealth using the single biggest benefit in the tax code. I always say life insurance is the only legal way to print money. So there you have it. The problems, the benefits, both to you during your lifetime and for your family after your death. The bottom line, don't just sit there and admire your IRA or 401k. If you have a large IRA, you have a tax problem. It's tax deferred, a sitting duck just waiting to be taxed. Use it, leverage it, or lose it to future taxes. Do something now while the best options still exist. Move your money from accounts that are forever taxed to accounts that are never taxed. And good luck. Thank you very much.
Wow, let's go. Ed Slott crushing it. Listen, this one was a fun one for me to review. So articulate, and it's fun for me to look at someone who's like the guy for IRAs and writes books and consults people, and he's saying amazing things about life insurance, and he's not incentivized at all from a standpoint of like, hey, like buy this company or this. It's impressive for him to have this mindset. Here's what I'll say is 2 things that you need to be aware of if you work with someone that doesn't understand how life insurance can fit into an overall picture, which is a lot of people. Then beware, because then life insurance is just another widget that's being pitched. And at the end of the day, you're going to look at it and say, this is probably not efficient in my portfolio. So that's number 1. And then number 2 is it's still got to be set up properly. Ed Slott talked about max funding. And I would assume, because he can't get into it in this detail in this video, but I would assume he's like, hey, we got to max fund. We got to make sure that the policy needs to be efficient, because if it's not going to perform nearly the way that it should and could enhance all the things that he talked about. But overall, 10 out of 10. Ed, thank you so much for this contribution, this articulation. And I hope this encourages you, gets you thinking differently. I would love to hear your biggest zinger or takeaway. Do you disagree? Do you think I need to make a part 2? Would love to hear your thoughts. Thank you so much for subscribing, sharing, and we'll see you on the next video.